If you have been finding it so difficult in analyzing the market, being able to predict market direction, or knowing where the market can go to due to the complex structure you see, or approaching the market seeing a very large range without actually knowing what to do, then this particular video on market structure is for you, or this particular entire training on this particular channel is for you, because I am guaranteeing you that what you're going to learn through this program will actually improve the way you trade in all domains. Whatever strategy you are using, the market structure you cover through this program, if you are able to be patient enough to go through this program right from the beginning to the end of the video, then you're actually going to change everything. You're going to be able to analyze the market, increase your winning percentage in the market, approach the market with extreme clarity, as everything I'm going to be giving to you is going to be having 100% way of approaching it, which is actually what you need. And if you can make your trading so simple like that, you're actually going to get consistent results in the market. Well, I'm going to be showing you everything you need to understand market structure, showing you how to deal with complex structure, showing you how to best approach the market and trade in any direction of the market without necessarily having to wait for market to come to a specific level for you to buy or sell, but being able to capitalize on anything that is happening on the market based on the powerful way you use in analyzing and understanding market structure. If you check the introduction video, I mentioned that structure is the foundation, and that is where we are starting. We are actually at the main program, which is market structure. And this market structure is not going to be maybe something of 15-minute, 20-minute video you have always been seeing on the basics. If that's what you have been thinking, then you are not actually going to learn. You have to actually sit down and grab a pen and paper and a cup of coffee and get ready for the show. Under this market structure video, we are going to actually cover a lot of topics. The first one being the basics of market structure, understanding the basics of market structure, which is what I'm going to show you. And that is why this video is very important. We cannot start and just go directly without touching the basics. My own basics is very, very different from any basics you have ever seen. So this is a complete different approach, or a new way to approach you are trying to learn. So anything here is worth it, and it is worth giving your time. And talked of the strong and weak swing highs and lows in the market, and we are going to talk of change of character and trend change. These are also very, very important topics throughout this program, which we're going to see. They were also going to talk of the last thing, which is actually mechanical structure mapping. Mechanical structure mapping simply means you mapping a structure, having a unique way and the same way to approach it. No matter what market condition you find yourself, you have the same way to approach it, which is what I'm going to be showing you throughout this program. You might have been wondering, who the hell am I, which has been teaching you right from the beginning of this program. I'm actually called Abdel Forex, and I'm the founder of FOREX Train to Trade Academy, and we have helped countless of Forex traders acquire consistency and profitability with the power of the systematic trading approach we use in the market. Without wasting any time, let's actually get started. So you hear about the basics of market structure. What you always think of is us showing you the market direction. This is an example of how a bullish market will look like theoretically. So a bullish market structure actually consists of higher highs and higher lows. It always forms higher highs and higher lows. And how do we know? A higher low is actually the one that will lead to a break of structure. A higher high is the high that is actually going to start the pullback. A higher low is the one that is going to lead to a break of structure. As you can see, we refer to this level as the break of structure here. So that's the break of structure. Then this becomes the higher low, because that's the lowest point that has actually led to that break of structure. The higher high is going to be this high, because that's the highest point that have started the pullback and is higher in high than the previous high, and that is why we refer to it as a higher high. Okay, so this one now is now going to be the next higher low, because this low is actually lower in high than this previous one, so that's why they refer to it as a lower high. Then we now have another break of structure here, and this high line is now going to be considered a new higher high, which means if this market is to continue bullish, we're just expecting it to keep moving like this and causing new break of structure. So when the previous higher low gets broken, we refer to it as a break of structure, as you can see here. So this is an example of a bullish order flow in the market. So let's look at an example of a bearish order flow in the market. So a bearish order flow in the market is a downtrend market, a market moving a downtrend. We learned all these terminologies right at the beginning. So we talked of bullish order flow, market going up, bearish order flow, market actually going down. So this is an example of a bearish order flow. So a bearish order flow consists of series of lower lows and lower highs. So what is actually a lower low? A lower low is actually the lowest point that leads to a break of structure. When it goes down like this, it's actually the lowest point that will start this pullback. Why? A lower high is the highest point that will lead to a break of structure. So when the market breaks the lower low, it means that what? We now have a break of structure. Then when the market pull back, the lower low becomes the lowest point that has started the pullback. The lower high becomes the highest point that is actually going to lead to that break of structure. So this is how a downtrend move. So theoretically, this is how the market move, but this is not what we want to learn. We want to take you more deeper to understanding in a reality way of how the market moves. This is what you have been learning, and I want to show you now something which is a little bit advanced. In a reality way, this is how the market will actually move. It's not just going to be as clean as how I was showing you, seeing series of higher highs and higher lows forming, or series of lower lows and lower highs forming. In a reality way, the market is going to be very complex, and that is why this video is there to help you understand the market. No matter how complex it is, you should be able to understand and master structure, because structure is the king. So in a complex market, we always have a break of structure, and we'll have a higher low. So the higher low is the lowest point that leads to a break of structure. A higher high will be the highest point that has started the pullback. So sometimes when the pullback will be coming, it's actually going to be like this. It's not just going to be one move like how you were seeing here theoretically. In a reality of the market, this is how the market pull back. We're going to see it on the chart. So this is how it pull back. It pull back in a more complex way, thereby forming this type of structures. So when it forms like this, you should not get panic. You have to focus on the main information, thereby only looking at the informations that are the most value point. So when the market goes back like this and breaks structure, this place, it becomes the higher low, because this is now going to be the lowest point that has break structure. It's not this level, it's not this level, okay, and it's not this one. So this is the level that has gone and lead to a break of structure. So all these ones are structure which we are going to address on this video, and that is why I was saying that this video is going to be somehow a little bit long, and you have to pay attention to it right to the end. So when we have another break of structure, this is now going to be the lower high that has led to that break of structure. And when it is pulling back, it's going to be pulling back in a complex way like that. So a swing high is always the highest point that has actually caused a swing low. Why? A swing low is actually the lowest point that has caused a swing high. Okay? So anything happening between a swing high like this and a swing low, we refer to them as internal structure, which is what we are going to be seeing. Anything happening within it, we refer to it as internal structure. And after a break of structure or a swing break of structure, what are we expecting? We are expecting a swing pullback. After every swing break of structure in the market, we're always expecting a swing pullback. After every swing break of structure, we're always expecting a swing pullback. Okay, so let's try to look at the bearish example of this. So this is an example of the bearish scenario where we have a break here. So this is now going to be the swing high, because that's the highest point that has caused the swing low, and this is now the swing low because the lowest point that has caused the pullback to form a new swing high. Okay, so any piece of structure happening between the swing high and the swing low, we refer to them as internal structure, and we are going to address this internal structure. So this is actually now another swing break of structure. Then this is now going to be the new lower high. It's not this high which is the lower high, not this high which is the lower high, but this one, because that's the highest one that leads to the break of structure. This is the lowest level that starts the pullback. This is the highest level that leads to a swing break of structure. And this is how the market moves, and this is the basics of you reading market structure. After understanding the basics of you reading market structure, let's try to jump now into some juicy information that are actually going to change everything about your trading. So we're going to talk about the strong and weak highs and lows. If you have been seeing how I'm trading, you will see me using them all the time. It's actually a way to give me a guide on how I can best trade the market and understand which level is a protected level and which one is not a protected level in the market. Let's look at an example. I want to bring you now my own way of approaching market structure. Okay, so a strong low is the lowest point that has actually led to a break of structure, while the weak high is actually the highest point that starts the pullback. A strong low is the lowest point that leads to a swing break of structure, while a weak high is the highest point that starts the pullback. A strong low is the lowest point that leads to a swing break of structure, and a weak high is the highest point that will start the pullback. Why do I call it a strong and why do I call it a weak? Because I know that what a strong swing level is a protected level. It is a level where price will always have it difficult to break above or below it. Okay, that is why I give that level that name the strong, because it's a protected level, and that is why dealing with those swings are more important. So the strong swing will always lead to the break of structure, and it's a protected level where when the market is coming down, you don't want it to breach. Let's look at a bearish example here. A strong high is the highest point that leads to the swing break of structure, while the weak low is the lowest point that starts the pullback. The strong high, highest point that leads to the swing break of structure. The weak, lowest point that starts the pullback. The strong, highest point that leads to the swing break of structure. Weak will be the lowest point that will start the pullback, as you already saw it on this bullish example. So this is actually the bearish swing of how you can do. So these all levels are swing level, and they are protected level in the market where you're anticipating that the market should not breach them. Okay, where you're anticipating the market not to break or breach them. Now let's try to put it in a more advanced way, like in the reality of the market. Now you can see this is now our strong low, and this is our swing break of structure. So this level is a protected level in the market, where a level where you don't want the market to break. Okay, you don't want the market to break. So this is a weak high. This weak high is the highest point that will start the pullback. So as you can see, this is the pullback happening. So when the market pull back to some certain level, it can be any level within the equilibrium or at the extreme level. So far, it is not going here. The philosophy said that what? It should not break the strong. Majority of the time, when the market pull back, it will always come and respect the strong without breaking the strong, because the strong is acting as a protected level. It's acting as a level where it is holding price in a way that if it breaks, then the trade idea will become invalid. It is a level where you're anticipating for a reversal, and that is why the market will actually respect here, and you'll see the structure will go up and lead to another break of structure. Now, you'll be asking where your next strong is. Your next strong is not here or here. Your next strong is actually down here, because your next strong will be the lowest level that actually lead to another swing break of structure. Like here, you see this is a weak high because it's the highest point that have started the pullback. When it goes and break, this is the lowest level here of the pullback, which means your next strong was here. Maybe this market just pulled back 50% and decided to go out and cause another break. So a strong is a protected level where you don't want price to breach. Why? The weak is actually a level where you're anticipating the pullback to come from. A strong low is actually the lowest level that always cause the higher lows. Why? A strong high is actually the highest point that will cause the lower highs. So the goal is actually to catch all the higher lows and lower highs continuation and where the strong are. So the goal is always to catch this level. Whenever the market pull back like this to any of them, you try to catch. If you pull back, you try to catch. That's how it works. Now, let's try to look at the bearish scenario. So this is now going to be our strong high. Instead of low, we are calling it high because it led to a bearish break of structure. This is now going to be our weak low, because it's the lowest level that have started the pullback. So when the market now come back here, so far as we are calling this level a strong, is because it's a level we don't want price to breach. So we're just expecting price to go there and lead to another swing break of structure. The same thing continues over. After understanding strong and weak highs and lows in the market, the next thing you have to understand is actually trend change. Understanding how the market usually change trend. I am giving you everything like this. When I go to the chart, I'm going to break them down to you in details. You will see everything I'm mentioning here theoretically on the chart when we get there. So this is an example of how a trend change occurs in the market, where we'll have the market pushing up. You can see this is a break of structure. This is our strong low because this is the lowest point that leads to the break of structure here, and this is now our weak high because it's the highest point that starts the pullback. This is a strong low, then is the lowest level that leads to the break of structure. Okay, so this high is actually the weak high now because it's the highest level that we're anticipating to come back. This level is a strong. So if a strong gets broken in the market, it simply means that what? The trend has actually changed. If a strong level or if a strong piece of structure gets broken, it means that what? We have a change in trend. So because when this market was going up, we're expecting the bullish order flow to continue. And now we now have a break of that bullish order flow, which means that what? Is a start of a trend reversal. The bullish expectation here of the higher low has actually failed and becomes a lower low, confirming a bearish trend change. Okay, this weak high which you have here automatically will turn and become strong. Why? This level now will now become a break of structure. So this is now going to be a next weak level, so which is starting a pullback. And if this level is a strong, that means you are anticipating that what? Price should not break it. So when price pull back there, then it goes down and break again, there will a new strong will form. And if this other level is a from, you're also anticipating that price should not break. So if it pulls back and goes, then no problem. Then this is now our next strong. This is now our break of structure. This is now our next week here that was broken. Then this is our recent week. Okay, so this is our recent week. And if the market is to continue bearish as it has been, they were expecting price not to breach the strong level. So if price return like this and breach the strong level, then the strong will turn to a break of structure. Meanwhile, the low will actually turn now to the new strong because the trend has actually changed. Okay, so the low took out the strong high and becomes a protected level, a level where we don't want price to break. And you can see how the market continues to the upside. Now, let's go to change of character. So what is actually a change of character? Change of character are early signals in the market. We usually call them early reversal signals in the market. So you can see change of character as a bullish structure changing to bearish structure and a bearish structure changing to a bullish structure. So generally used for internal structure. We're going to break them down as we're going on. So that's how a change of character is. So if you see a market trending to the upside like this, forming series of strong and weak highs, then when you now see a change of character, it signals the start of a pullback, mostly sometimes internal pullback. So that's how a change of character operates. Then when you have another change of character, it now signals that what this swing run that was going like this has completed and the pullback wants to start. When you have another one here, it signals that this pullback has completed and now the market now wants to go up and lead to a break of structure. If that sounds confusing, let's try to understand it more better. If you look at this example now, you're going to see this is an example of a bullish market structure. You see the strong and this is now going to be the weak. So as that's a strong and this is the weak, this is now a change of character. So this change of character here, it is signaling the start of the pullback internally, because we said anything happening within your strong and your weak is the internal. So this change of character is signaling the start of this internal pullback. So when the market now returns down to maybe the strong level, which is actually the protected level, then and give another change of character, it now signals that what? It now signals that the pullback has completed and the market now wants to go up for the next swing run and cause a new break of structure. The bullish change of character internal structure now are aligned with the swing structure, signaling that the pullback may be over and now the swing run actually wants to start in the market. So that's another example. Let's try to see different example. So this actually signal when a run may be finished and a pullback is about to start, and when a pullback is finished and a run is actually about to start. You don't pay attention to change of character everywhere because they are going to be everywhere on your chart. If you want to pay attention, you see them everywhere. So you only pay attention to change of character at the most valuable areas. And what levels are actually the most valuable areas? If you see this one here, this is still the same analysis. Okay, so for example, you see a change of character signaling a pullback, and later on you have another change of character signaling that the pullback has completed. Okay, so sometimes if you want to pay attention to change of character everywhere, you are going to get false signals. Are going to actually get false signals. So you only want to pay attention to them at the most valuable areas, and I'm going to be showing you those type of areas on the chart. So this is an example of a change of character. It is valid. So it is signaling that only the swing run is coming in. You now had the swing run, but the swing run failed to go and break and cause a break of structure to form a new swing range. So as it failed to break, you now have it returns now and give another change of character. So when it returns and give another change of character, this new change of character now is now signaling that the market wants to continue. So automatically this other low here becomes a false signal. So this was an early signal showing you that it's reversing. And we are going to see a lot of these on the chart when we're actually going on. But when it drops very well and came down right at the protected level here, you can now see how the market actually gave a change of character now and went up and break here. So paying attention to change of character at levels that are not actually the most well-priced level is actually very, very dangerous, as you'll be seeing ahead, as I'm going to be showing you. So you only want to pay attention to change of characters that are actually well priced. Or if you don't want to pay attention to change of character that are actually well priced, then you have to increase the confluences of that change of character which you are using with medium time frame analysis, supply and demand, liquidity, premium and discount, or whatever approach you use in trading. You have to increase that confluence before making that change of character valid for you to use. So we're going to actually see all this justification on the chart. Talking more about change of character again, it is not a guarantee that it's going to be giving you all signal reversals. It's signals that the market wants to turn, but not all of them are guaranteed. There's some change of character that will happen and the market will only go. And that is why you were supposed to increase it with all those confluences I'm telling you. So change of character can act as an anticipation of a trend reversal. And you can also see it as a trend reversal or just a pullback. So sometimes when you see a change of character, this one could just be a trend to anticipate a trend reversal to come and break like this. Okay, so when the market comes back here, for you to actually know that the strong will, you need another confirmations, which is what we are going to be seeing. Then when the market returns now here for this example here, you can now see how it gave a change of character, signaling that truly it doesn't want to only use it. We don't want to use this other one as a reversal, but rather it wants to form another one to signal that what truly I'm now at the level of a strong and I want to start going up. So that's why change of character is very, very important in your trading. So we map structures in two different ways. We have the type 1 mapping. Type 1 mapping has its own way of mapping it, where we just focus on candle body closure, which means we want to see a candle closing above the highest point. That is, use the highest point and you draw to the future, and you want to see the candle body closure before we call it a break of structure. So this is the most conservative way you can do in mapping structure, because when the market closes here, it means that what buyers and sellers have agreed to close price at that level. But if you map this one as a break of structure, it means buyers and sellers did not agree that price should close above here, and it can be a potential liquidity. So when a candle closes like this, it is more advantageous, and that is why we use this. But I'm going to show you guys all the approaches so that you will choose the one which is actually going to be good for you, and you should make sure that from today henceforth you should always map your structure the same way. Not that tomorrow you should map like this, after tomorrow you map like that, because if you can make your thing so unique and simple, then you easily become successful with your trading. So that is actually type 1 mapping. Now, what is actually type 2 mapping? Type 2 mapping, we are comfortable to see a wick. If a wick happens, then we can still call it a break, for example, like this. So we can call it a break of structure. So type 2 mapping is the most aggressive. And if you look very well, I always map from the highest point of the last candle to where it closed. Where it closed, I automatically stop if I'm using type 2 mapping. But if I'm using type 1 mapping, I will extend to see a candle body closure. Now for type 2 mapping also, if a candle body closure occur, then I'm still going to call it the type 2 mapping. If it occur, I'm going to call it type 2 mapping. And if I have a wick, I'll still call it a type 2 mapping, and I'm still going to call it a break of structure. So those are the difference. And type 2 mapping is the most aggressive. So sometimes I suggest you go with type 1 mapping. That is just a suggestion. Any of them which you have been using and is going very well for you, then you can always use it. But this is actually what will be more conservative. Conservative means the what is not too complicated to use. So this is type 1 mapping. This is actually type 2 mapping. And where can we use type 1 mapping? Where can we use type 2 mapping? That's what you need to know. We mostly use type 1 mapping for break of structures, and we use type 2 mapping for change of character. For example, you can see this is a swing break of structure. This is our strong swing. This is our weak swing. Then this is a change of character signaling the pullback. This is a change of character signaling the pullback has completed and the market is going up. And this is another break of structure. So type 2 mapping and mostly goes for change of character, while type 1 mapping goes for swing break of structures. So you have to know these things, and you have to make sure that you always use it in any way you want to use it. If you want to reverse and use the other way, then good for you. Then if you don't, then there's no problem. We are going to hop to the chart so that I will show you how I do to map them and everything you have learned throughout this theoretical process. So here we are on the chart. I am going to actually show you guys everything we saw on the theoretical part, where I was telling you about anything happening within the swing range being called the internal range. And I'm also going to be showing you people what change of character is and how trend do change. I'm also going to be showing you how trend do change even in internal way. This program is specifically designed to handle complex structures that you have difficulties, you always have difficulties dealing with them. So I'm going to handle the one that is very simple, and I'm going to handle a structure that is also complex, so that if you find yourself in any of them, you can be able to best trade it properly. So without wasting any time, let's actually get into the real deal. So if you look here, if I try to squeeze my chart a little, the current market structure is bullish, okay, right from behind. But I'm going to focus right in front here. If you look vividly right from behind here, you are going to see that this level here is actually our strong low. Okay, this level here can be called our strong low, and this one our weak high. Why is this one the strong swing low? It is a strong swing low because it's the highest point that leads to a swing break of structure. So when the market returned to that swing range, it was respecting, which is the same thing I was showing you on the chart. So we now have a new swing break of structure, which is actually right up there. So that's our new swing break of structure, and we are expecting the market to respect that new swing break of structure. So when that new swing break of structure has formed, then this is now going to be our new strong low, and this is now going to be our new weak swing high. Then this is our new swing break of structure that form. Now this strong low is a protected level. Like we said, it's a level where I am anticipating that no matter how the price pull back, then it should not go above or below that level. So that was what we said. Now, looking in this structure here, I also told you guys that anything happening within the strong and the weak, we refer to it as the internal. So whenever you go to your chart and you define your swing range, your strong swing range, your weak swing range, and your swing break of structure, anything inside your strong swing range and your weak swing range is what we refer to as internal structure. In other words, this piece of structure here that is now forming here is referred to as the internal structure. Why do they call it internal structure? It is happening inside the swing break of structure. I want to take it gradually like this before we go to take change of character. Okay, so but I want you to understand this very well. So any other piece of structure happening inside this one, we refer to it as the internal structure. So if you look here, you're going to see that all this internal structure we're just facilitating this one swing run that when I lead to this swing break of structure, all this internal structure, and this internal structure are tradable. It's not that maybe you draw a level of supply like this and you wait for price to come back there in the future just for you to sell. You can be able to capitalize on this one while waiting for this one to come and you sell from there. For those who already know a little bit about supply and demand, they'll get what I'm trying to say, for example. Now, internal structures are very important. That's actually what you mostly trade. You mostly be trading it. Look at this other one here. Let's try to look at this one here in detail so that you see. If you look at this other internal structure here, what are you going to see? You're going to see that this internal break of structure can also form its own internal strong high and internal weak low. This is its internal strong high, this is internal weak low, and this is the internal break of structure. And as this internal break of structure is forming, it is just facilitating that swing run on the swing time frame, because the swing time frame is the bigger picture. Okay, now when the market wants to give a internal pullback, they will have a change of character, and that change of character will now facilitate an internal pullback on that time frame. And when that internal pullback has been facilitated, since this is the internal swing run, it is actually a protected level where we don't want price to breach. And how will you know that the internal pullback has completed and now the next swing run wants to come in? You are going to know that but with another change of character. So when you have another change of character now, it signals that what this internal swing pullback has completed and price have come back and tested a level at the strong, because this is a protected level where you don't want price to breach, and price is now ready to actually go up and take out the weak swing. So when price goes up now and take out maybe the weak swing of the internal range, then another new internal range is going to form. In this case here, this other new internal range that was formed when I lead now to the swing break of structure. So this swing break of structure was also facilitated by this internal range here. that also contributed to it. So we now have our swing break of structure, and these ones are happening inside. How will you know that a swing pullback is coming in? Based on what you saw on change of character, because we said change of character can either be starting a reversal or signaling a trend change. So far as it has started, you can now start capitalizing on it. Why? When you reach at a strong level, you now ask, is it for a reversal, or is this change of character going to give me another one to confirm that it's a trend change? We are going to explore that as we are moving ahead. Now, this new change of character is now signaling the start of a swing pullback back to this level. Remember, it can just be back to this other internal level, or it can be a complete swing pullback. It can be a reversal. So we'll never know, but it's an early signal to show you that what price will not keep going up again. Because when this one was pulling back and breaking, pulling back, break, it was just continuing up. But when you pull back, break, and come and break down like this, then it simply means that what you now have a change of character, signaling that the trend want to actually change its direction. And as you can see, you saw how the trend actually changed and start forming internal break of structure. This is now the next internal high, and all this, remember, all these pieces of structure are happening where? They're happening inside this range. Okay, they're happening inside the swing range. So we said whenever a swing has been defined, any other piece of structure building inside it, we refer to them as internal structure, and they are tradable. You must not wait for price to come back right down here before you now try to buy. You can be trading this while waiting for it to come here, and you trade along with those who are actually waiting for it to come there. That is, you have now increased your strike rate in the market, which is very, very important to your growth and success as a trader. So we now have a break here. Now, this is now going to be a strong swing. This is now going to be our next week swing. How will you know that a swing pullback is starting? You are now going to actually see a change of character. In this case, no change of character was formed, and you just have the internal structure pulling back, facilitating that swing run, which is actually happening on the higher time frame. As you can see, that's the swing run. Then we now have price coming back to the last strong internal strong swing, which is this internal weak swing, and this was the internal break of structure. So price returned to the last internal strong swing. Since the internal structure is facilitating now the swing pullback, it is actually a protected level. It's a level where your price will not actually go through so easily. So you now see this another internal break like this. Okay, and then this is the next internal strong swing, this is the next internal weak swing. How will you know that the next internal swing pullback is coming? Is by a change of character. And when the market gives the change of character, that's when the next internal swing pullback is actually going to start. As you see here, with that change of character, this was it here signaling the start of the internal swing pullback back to this high. So price returned to this high, gave another change of character, but failed to continue down. But the strong is still active. This is the internal strong. Until this go, before you can start looking for any buy idea. If this doesn't go, you cannot look for any buy idea because the internal structure is still bearish. No matter what is forming here is just in a range until that go. This change of character signal that price wanted to come back here. Now we had another one signaling that what price wants to go down and break for a new strong to form, but it failed. And as it failed, it simply means that what the trade idea is not confirmed yet. So you just have to wait to see either a break below and a new strong form. Then you look for another trade to change of character to start trading, or you basically wait for the strong to go. So this is an example of how a trend will change. A trend basically changes where you actually see a strong being taken out. Like for example, this is the internal strong, so you can see the internal order flow was actually bearish like this. Or the forming all the strong were protected. This is the only last protected strong that got violated, as you saw on the trend change. And as it got violated, it's a sign to signal that we now have a trend change in the market, and there is a higher chance that the market will start going up until it goes and take out the weak swing, which is right up here, and the market has not even taken it out yet. So you just see price is now sitting at a level here, and as it's sitting there, we now have another change of character signaling that maybe this internal pullback here, because this will now be like your internal strong and this is now your internal weak. So this change of character is just signaling that this internal pullback might be completed, and we are now anticipating price to continue up until go and take out the weak swing. Remember, I said that change of characters will form almost everywhere. you don't pay attention to them, and you have to add other confirmations, but they are key. They can actually give you good signs of early reversal, so you must always use them in the market. If you look at this price action, basically you will see that everything in here is happening within here, and here. So all of them are internal structure. So there are cases where you can have internal structure and you have other internal structure happening inside the other internal structure itself. So we are going to be exploring that, especially when we go to the bigger range, which will be seen. I call this one a simple range, but I know for some people it is somehow complex, but for me this is a simple price action to deal with. Okay, nothing is complicated here, very straightforward based on what I showed you on the theoretical part. Everything is here. We have a trend change. This is actually a pullback, change of character, everything. So without wasting time, let's look at another example. Here is another example, and this one is a little bit complex but very straightforward. So this is our swing break of structure here, as you can see. Then we now have our strong swing up here and our weak swing down here. Okay, after having our strong and our weak swing, we now have a break here. So this break, somebody might say, okay, this is another swing break and this is another swing pullback, swing break. No, we don't view that as a swing break. We view it as internal break, and we view all this as one swing push to the downside. Why? Because this pullback is not sizable as compared to this one that came down like this. So all of them are smaller ones, and swing structure are big. We swing structure at the bigger range. Internal structure plays inside the swing structure. Fractal structure, which is the change of character, plays inside the internal structure. So that's how we view it. So we view this as one. If you go up to the higher time frame, this is going to be a one push to the downside. It's not going to be two. So these are all internal structure. So this internal structure are just facilitating this one swing leg to the downside. For you to know that the pullback is coming in and these are internal structure, you are going to just see it forming without any change of character until here where we had a change of character. So this change of character here, this is the first sign to signal to you that what a swing pullback is coming in, because this is now your strong swing and this is now your weak swing. Okay, this is the first sign. So price just returned to our demand level. Then we just started looking for buy and you go up in anticipation that what price should actually reverse. So when you have this first break, it means that what this internal order flow that was holding here behind this high and this low, this high and this low has been breached. Okay, and as the internal order flow has been breached, it means that what the strong has been broken. Automatically, when the strong gets broken, then the weak automatically turns to strong, and the strong itself will now become a break of structure. That was what I told you on the basics. So in this case, this becomes an internal break of structure, since this is the swing break of structure to the downside. If you can trade like this, you'll be able to trade structure in any direction and in anywhere. And it's for those who have been in our program or in our mentorship program or in the free group or any of the free groups, you have been seeing many of my students trading, buying and selling. Is because they understand structure like this, and this is what I'm trying to make you to understand. So this is now going to be a break of structure, and when you have a swing break of an internal break of structure like this low will now be the internal strong, this will now be the internal weak. So you are just expecting the internal order flow to facilitate the counter trend pullback back to the swing strong, because that's the swing strong and that's the most powerful level and that's the protected level, a level where you don't want price to actually breach. So when price now pull back to the strong or the swing strong like this, being facilitated by the internal pullback, then the next thing you want to know is to look for a change of character, which is this one. So this change of character is signaling that what that swing pullback has completed, and now maybe the price now wants to go down until it goes and take out the weak swing, the internal structures. Remember, you'll be following internal structures, but you have to be aware of the swing structure because it's going to give you a guide and it's going to give you a lot of protection in the market. When we now have the change of character, we just wait for the internal structure to switch bearish, which is actually what happened. You can see the internal structure have switched bearish. After it switched bullish again, then later on switch bearish. So when it switch bullish, you can always change your bias. With the use of change of character, is going to help you to know whether you should keep buying after this break or you should wait. In this case, this was the change of character here. This change of character signal that what? Okay, after this break, then it's going to go down. That's the change of character that signal it. When this one break down like this change of character here signal that what there was a start of the pullback. So when the market pulled back, it never gave any change of character. It gave a change of character here, but later on failed. But not all is going to work. But if you see, majority of the time, nearly all of them are working. So this is very, very powerful. This is the case where it actually fails and not everything works. This is now going to be as strong. Then you now have a new wick, which is going to be right down here. Okay, you can now see that price have returned to that extreme level. Oh, that swing range. You see, this one is too powerful. And when it returns there, it gave a change of character, signaling that what this counter trend pullback, this counter trend pullback that was happening, which you could have as well been trading it, is now completed. This counter trend is now completed, and now a swing run wants to come in. And when you now have that change of character, it signals that what this strong high is a protected level, and the market have now changed its direction, and it wants to go down until it come and take out the weak swing, which is going to be right down. And if the market now come and fail to go and take out the weak swing, thereby breaking here, then you also have to change your bias and start following the order flow until it goes to the direction where you want. So this is all we have for this particular topic, and I'm going to see you guys on the multi-time frame analysis, where I'm going to be showing a lot. You can look at any of these other videos to actually make an improvement to your trading. As of now, continue to trust the process.